Hi, I'm Ed Gooderham from Green & Co Accountants. Just wanted to run through some of the key points from the budget today. We're all worried about the budget in terms of all the doom and gloom we've been hearing over the last few weeks, but the reality wasn't as bad as we were expecting, which is great. So let's run through some of those points. So national insurance was the big one. So it's increased by 1.2% for the employer's charge, which is better than what we anticipated with 2%. And we've also got an employer's allowance increase from 5,000 to 10,500. So this will help a lot of people not feel the impact, unless your national insurance bill is over £100,000, in which case you won't get the £10,500 allowance. There's no change for employees and no change for self-employment. The secondary threshold, though, at which we start paying employers' national insurance, is also reduced from £9,100 to £5,000. So that's going to increase our national insurance costs. The national minimum wage has been increased from £11.44 to £12.21 from April next year. That's a 6.7% increase. And this is obviously going to push wages up again and costs at the bottom end of the employment scale. CGT, capital gains tax, was the other big area of tax that we knew that she was going to change. Again, it wasn't as bad as we anticipated, but there are several changes. So the main rates of 10% and 20% have been increased to 18% and 24%, which are the same rates that we were paying for residential property sales and disposals. No change in the allowance, so that stayed the same. Business asset disposal relief, so when you sell your business, your shares in your business, the rate of tax that you pay on that is currently 10% for the first £1 million. This again she's tinkered with, so from April 2025 that's been increased to 14%, and from April 2026 that's increasing to 18%. Inheritance tax was another area we're anticipating changes. What she's done is frozen the thresholds of 325,000, your main inheritance tax threshold, and the additional property threshold of 175 have been frozen until 2030. There's a bit of uncertainty about what she's done about pensions. When she stood up and spoke, she said that any inherited pension pots would be part of your estate. But reading the notes on 140 odd pages of her budget, it doesn't say inherited, it says pension pots. So we need more clarification on this to make sure we are fully clear on what she's saying. The other main reforms in inheritance tax is for agriculture property relief and business property relief. So agriculture property relief obviously for farming clients. At the moment you get 100% relief on everything, so you could pass your farm down to your children and pay no inheritance tax. She is looking to bring in from April 2026 a new threshold of £1 million that can be passed down free of inheritance tax, and then anything over £1 million will be taxed at 20% instead of 40%. This is a big change in that area, and also for business property relief, so shares in trading entity, trading business. Again, the same rules, £1 million can be passed tax-free. If it's over £1 million, you get this 50% reduction, so you're only paying effectively 20% on the amount over £1 million. AIM shares, for any of those who have got AIM shares for inheritance tax reasons, the rate of that's going to be a 50% rate at 20% as well. And there's also a £1 million allowance for trusts, and again we'll wait to find out more information on that area. Corporation tax, no changes at the moment, or reliefs. Dividend tax, amazingly, we heard nothing mentioned, and we can't find anything in the notes about it, so there seems to be no change to dividend tax rates. And personal allowances are frozen until 2028, which is what they are currently, and then they'll be linked to the CPI after that. Vehicles. So lots of people have company cars, and they're looking at increasing the rates on company cars. For electric cars, which are going up from next year by 1 percentage point, from 2% to 3% to 4% to 5% by 2028. And then we've got some certainty now that in 2029 it'll go up by another 2%, and the same the year after. And for other vehicles it'll increase by 1%. The big change in company cars is the one that she didn't mention. Double cab pickups. from April 2025, they're going to be classed as company cars. Unless you've already got one, so if you've acquired one, leased one, ordered one before April 2025, they'll still be under the old regime as long as they've got a ton payload. So that you won't pay car tax benefit, you'll only pay a van benefit on it. But this is a big change which wasn't mentioned. This was voiced sometime in the summer with a big hoo-ha about it and got reversed, and now they seem to be bringing it in by the back door again. So I'm sure it'll be in the papers soon once they realise it's there. So if you do want to get a double cab pickup with a ton payload and make use of the advantage of the low tax rates that are associated with it, you need to do so before April next year. The other big change was for property clients who buy and sell property and rent them out. The extra additional tax rate for the land transaction tax in Wales, we're not sure if that's changing yet, but in England the stamp duty rate is going to go from 3% to 5%, and that comes in tomorrow. So that's another additional charge when you want to buy a property, which they just keep increasing all the time. And linking in with that, the other tax changes that are happening immediately was the capital gains tax rates. They go up from today, which just to highlight those points. So that was a quick run through of the main points from the budget today. As you can see, it's not as bad as we thought it was going to be, especially with dividend tax not changing. So any questions, please come back to us. Thanks very much for watching.